Welcome back to the Freedom Escape. Today we're breaking down how the World Cup actually moves money, real numbers, real stocks, real companies, and what's happening in the markets right now because of it. So if you want to stay aware of the weekly global market news, subscribe and leave a like button. Let's get into it. Let's start with scale. This tournament is expected to generate close to $14 billion in direct event-related spending worldwide and contribute over $17 billion to U.S. GDP alone. Added up globally, and some estimates put the total economic footprint near $41 billion. That's bigger than the GDP of some entire countries, generated by a soccer tournament. But here's the key thing to understand. The World Cup doesn't move markets the way a central bank interest rate decision does. There's no single announcement that shakes Wall Street. Instead, it works like a wave, hitting specific sectors, specific companies, and specific countries one at a time. The most direct financial impact is tourism. Analysts at J.P. Morgan estimate the tournament will generate over $900 million in incremental U.S. hotel revenue alone, with hotel prices in host cities jumping as much as 25% during June and July. Rideshare companies are cashing in too. Bookings could rise by more than $500 million during the tournament as fans move between stadiums, hotels, and fan zones. Airlines are feeling it as well. Goldman Sachs has flagged Delta, United, and American Airlines as direct beneficiaries, thanks to a surge in cross-border travel between host countries. And on the hotel side, big names like Marriott, Hilton, and MGM Resorts, along with hotel REITs like Host Hotels and Resorts, are seeing tighter room supply and higher prices in host markets. This is where the really big money is. The tournament is projected to drive around $5 billion in incremental global advertising spending, with roughly $4 billion of that flowing into digital channels. In the U.S., national TV advertising inventory tied to World Cup broadcasts is nearly sold out. Fox Corporation, which holds the U.S. English-language broadcast rights, could pull in about $550 million in advertising revenue from the tournament alone. Now here's an interesting historical pattern. J.P. Morgan built a basket of official World Cup sponsor stocks, companies like Coca-Cola, McDonald's, and American Airlines, and found that in the last two tournaments, that basket actually outperformed the broader S&P 500. That's not a guarantee it happens again, but it shows sponsorship can translate into real stock performance, at least temporarily. Some of the clearest World Cup winners are consumer brands. Jefferies analysts estimate the tournament will add more than 1 billion cases of beer in global consumption, enough to move the entire industry's annual sales growth by a few tenths of a percent. Companies like Anheuser-Busch InBev and Ambev in Brazil are leaning hard into this. AB InBev's own CEO has said the World Cup creates very big uplifts for beer brands depending on the country. Television makers are seeing a boost too. Global TV shipments grew 6% year-over-year in the first quarter of 2026, largely driven by people buying new TVs ahead of the tournament. And in Latin America, e-commerce and digital payments platforms, like Mercado Libre, have seen real stock movement, gaining roughly 6 to 7% between the start of the tournament in June and early July, driven by expectations of higher digital spending during the games. This World Cup is also becoming a major moment for sports betting and prediction markets, a sector that barely existed at this scale during past tournaments. Barclays analysts specifically called out sports betting as one of the best-positioned sectors this year. Robinhood, for example, now has real exposure here. Prediction markets made up about 10% of its revenue in the first quarter of 2026, and the company even launched a new prediction market exchange right as the tournament kicked off. Compare that to CME Group or Coinbase, where prediction markets are a much smaller slice of the business, and you can see why some companies are more World Cup stocks than others. Analysts, however, are cautious. Barclays described the overall tournament as not a game changer for most companies, meaningful but usually short-lived once the final whistle blows. So what does this actually look like in real time? The tournament kicked off June 11th and wraps up July 19th at MetLife Stadium in New Jersey, meaning we're in the final stretch right now. Investment banks like Goldman Sachs and Deutsche Bank have been tracking this in real time, pointing to travel, dining, and betting stocks as the clearest short-term movers. JP Morgan strategists noted that despite the scale of the event, investor expectations going in were actually fairly muted due to broader economic uncertainty, which means any positive surprise from World Cup spending could give sentiment an extra lift. There's also something analysts call the winner's rally, a documented tendency for stock markets in the winning country to get a small short-term sentiment boost after the final. And on the flip side, there's the winner's reversal, where that excitement fades and markets normalize within weeks. The bottom line from nearly every bank covering this: the World Cup effect is real, but it's a temporary consumption pulse, not a long-term shift in company fundamentals. Every World Cup pays off. Qatar 2022 is the go-to example. The country poured enormous sums into stadiums, metro lines, and airports for a tournament that lasted just weeks. When host nations overspend and don't see long-term returns through tourism, trade, or global image, that investment can turn into a financial burden rather than a boost. There's also a quieter cost: lost productivity. During major matches, workplace attention drops, some businesses lose hours of output. Even as bars and restaurants nearby see a surge in business, it's a real trade-off, even if it doesn't show up in GDP the same way. So no, the World Cup isn't going to move markets the way a Federal Reserve decision does, but it is a real, measurable economic event. Billions in tourism, billions in advertising, real stock outperformance for specific sectors, and a genuine, if temporary, mood boost for entire economies. That's the World Cup, decoded through the lens of global finance. We're still a new channel here at the Freedom Escape, so if you're one of our newest subscribers, thank you, seriously, it means a lot. We post new videos every week covering global finance news, so hit subscribe if you want to stay ahead of stories like this one.